Kristen King, and you're watching Pink Diamond, the show where we help you find the diamonds in the rough of the pink sheet and small cap market. This week, we're going to look at the trends in the OTC market rather than looking at one specific stock. You have probably heard about how a large group of loosely organized day traders have taken on hedge funds and squeezed the short positions that those funds held in stocks such as GameStop and AMC. Some of these traders have made good money in the process as share prices in short-sold stocks have risen dramatically. For example, GameStop's share price has risen by more than 1,570% over the last month alone, whilst AMC's stock price has risen by almost 480% in the same period, a price rise that may allow AMC to avoid bankruptcy. So far, so good. However, these retail traders are now looking around for other stocks whose share prices are depressed and are buying into these stocks in hopes or expectation of seeing their share prices rising dramatically too. Many of these stocks are found in the pink sheet and OTC markets. Now, of course, there's nothing wrong with buying low-priced stocks if you believe that the share prices will rise in the future. Indeed, that kind of thinking has underpinned what's known as value investing for the last 70 years. However, these types of investments are usually made when new information about a business becomes available. For example, if a company wins a large contract or owns assets that are being revalued by the market, or perhaps the company itself is transitioning between sectors or listings, or is even being taken over. We've regularly covered these types of situations on Pink Diamond in the past and will continue to do so in the future. What's happening now, however, is that traders are buying stocks where there is no new information or change in circumstances other than the buying interest in the stock. And that's where the problem could start. For example, one of the stocks that has been bought by the groups of retail traders is OTC-listed Blockbuster, the former video and DVD rental business, which once employed almost 85,000 people worldwide, filed for bankruptcy in 2010, then sold its brand and most of its business interests to Dish Network the following year. The stock Blockbuster Liquidating Inc. is effectively a shell with no ties to the Blockbuster brand or its former assets and remains in bankruptcy. In fact, if we look at the details of the company's listing on OTCmarkets.com, we find a full page of warnings, including one that says investors should be aware that no firm is making a market in this stock on OTC Link. All prices reflect unsolicited customer orders, and investors may have a difficult time selling this stock. And that sums up the issue perfectly, because Blockbuster Liquidating's stock price has risen by 1,900% over the last month, and its shares are trading more than 12 times its 3-month average volumes. Trackstar IQ shows us that 90 requests for information and searches on the stock were by 68 individual Wall Street professionals in recent weeks, putting Blockbuster Liquidating in the top 25 most searched for OTC tickers within the Trackstar IQ database. However, in this instance, there is no new information for those institutional traders to find. Blockbuster's share price has been rising because large numbers of retail traders have been buying the shares. But for the share price gains to be sustained, there needs to be a continued stream of new buyers for the stock. Once there are no new buyers, there will be no reason for the shares to continue to rise. And with no market makers in the stock to try to match buyers and sellers, things could get pretty ugly pretty fast as everyone heads for the exit at the same time. Blockbuster Liquidating isn't the only OTC stock whose share price is being ramped higher by this new retail trading crowd. If you are involved in these types of stocks, we suggest that you exercise extreme caution. That's all we have time for this week. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar. Small and microcap stocks can be high-risk investments, so before you make any decisions, please ensure you do your own due diligence.